So that's like the rumor going around in the last like 4 days.
Okay, Wayfair is into child
Child
trafficking.
trafficking. Yeah.
Okay,
So we
sounds
can
good.
start a video like that,
Start spreading
honestly.
that rumor. We'll start the
Right?
video out that way.
Right. We'll start it out like that.
Yeah,
Meanwhile, the stock's gone from 20 to 220 since
good
March.
sign of child trafficking, if you ask
Dude,
me.
it's booming if you had to ask me.
So, Danny, earnings season's coming up.
It
What do you
is.
think is going to happen? Everything's going to burn because this pretty much the reports from the height of the coronavirus, right?
Yeah, so the coronavirus really didn't affect Q1 for more than like a week or two for most companies. So second quarter is going to be the thick of it now. So we'll see how everybody fared over the last like 90 days, basically. I don't think it's going to be very good for 95% of the companies.
Is like the whole stock market going to crash and burn, or is it just going to be the specific companies going down? And
I
what do you
think
think?
it'll primarily be the companies that you own, but everything else should do all right. It all depends. It's going to be company specific. Obviously, some sectors will struggle more than others too. I really want to have exposure to certain sectors because there's a lot of downside still. Like Carnival on Friday morning reported this past Friday, and they lost $6 per share, and the stock's worth
Well, I
14.
mean, it's like no shit. They're a
Yeah,
cruise line company that's not
not operating. They're
exactly.
losing $1.2 billion a month.
Yeah, I mean that sort of makes sense. So what we got coming up this week is a bunch of banks, and I saw Netflix on there, and like Pepsi and Pizza Hut or Domino's or something.
Domino's,
So
yeah.
first off, before we get into it, why have the banks been struggling so hard? And do you think they can get themselves out of this hole with some good earnings, or you know?
So anytime there's economic uncertainty or recession, anything like that, the banks have to build up capital buffers in case of losses on any of their actual loan portfolios, whether it's consumer lending, mortgages, you name it. And that affects their earnings per share because they're having to just escrow a bunch of money for future possible losses.
Hmm.
So yeah, JP Morgan, Wells Fargo, you name it. This Tuesday is Wells Fargo, and then Wednesday is Goldman Sachs, Thursday is Morgan Stanley. All of them are going to be reporting pretty bad earnings year over year because of these loan loss provisions that they're having to just expand because the expectations of bad earnings and poor performance in their divisions.
Okay. All right. So let's take a look at the Earning Whispers weekly chart there and see what you think. We got Pepsi, the only thing worth mentioning for Monday, and then a bunch of banks and Netflix. And so, what do you keep an eye on?
JP Morgan's big though, actually. JP Morgan and Wells Fargo are going to really push the entire sector. So as long as their earnings aren't horrendous, I think both stocks will rebound pretty significantly. Wells Fargo's at 25 and a half, and JP Morgan's at like 94, with decent earnings and more importantly, guidance. That's the main thing. Where if they're not projecting a huge expansion in loan loss provisions going forward for the remainder of the year, I think JP Morgan ends up back over 100 and Wells Fargo probably heads back towards like 27, $28 a share.
Okay. And Delta, I mean, no one's flying airplanes, so that can't be good.
Yeah, I wouldn't want to own Delta or American. United's a little bit better, but they're all losing money right now, a lot of
Yeah.
it. So they're all very high risk stocks. So they could end up in bankruptcy. Not Chapter 7 where they shut down, but Chapter 11 where the stock ends up being worthless. So I
Yeah.
really wouldn't want to own them, honestly.
Out of all of them, would you say Delta is like one you'd hold on to more than any of the others, or no?
Uh, if I had to pick, gun to the head, probably JetBlue would be the one I would pick. Actually,
Okay.
they're the best run. They're the most consistently profitable, and they have the least amount of debt, I believe, out of the whole sector. So,
Okay.
and
All
the
right.
last year is
Wednesday.
not bad either. Wednesday, Goldman Sachs isn't terrible. I wouldn't mind maybe picking up a little bit of that prior to earnings. So you have to pick it up Tuesday before the close. And Infosys isn't bad either. They're IT based, so they're pretty steady. Progressive should do well too.
Yeah.
That's
What about Progressive? And we were talking about Allstate in our Discord the other day. Like those, everyone's going to still be buying insurance and everything like that, right?
yeah. That you can't go without insurance in this world. So it's something that's going to be pretty consistent. That's why I've always hammered on Principal Financial Group and all those type of insurance plays because they're all going to end up still collecting premiums. The downside to it and why they've underperformed a bit, I guess you could say attributed to is they end up collecting all those premiums and they put that premium to work. So when interest rates go down, they make less money off of all those premiums. But if interest rates are really low, it's harder for them to make a return on that huge pile of cash they collect every year.
Okay. All right. So, but the big one that I think everyone's going to be wondering about for Wednesday is Sleep Number.
It is. That's people are going to be losing sleep. I shouldn't. That's a dad joke. I'm going to stop
That's
right there.
terrible. All right, we're just going to probably cut that one out.
Yeah.
All right, Thursday is a pretty big day. You got Netflix, Bank of America, Johnson & Johnson, Abbott, Johnson & Johnson, I should say.
I like Johnson and Abbott. That's cool. I should merge.
Johnson and Abbott, Morgan Stanley.
Yeah, Domino's I wouldn't touch with a 10-foot pole, not even with your money. Bank of America should be all right. And then, of the bunch, Netflix will be the most interesting to see because it is so overpriced as a tech stock, and they have so much debt. They just burn cash because of all their content.
Yeah, I've heard like they're going to be in debt for like the foreseeable future.
Forever.
Yeah.
They're spending like over $5 billion on content each year, and I would argue that library that they're building up doesn't have the type of residual value that is being attributed to it right now with the stock price.
But it's like a Tesla where it like almost doesn't matter what.
It's nonsensical.
What their numbers.
Chipotle, Tesla, Amazon. It's going to go up until someday it doesn't, and then and it's going to be collapsing on its own. I just wouldn't want to try and ride that wave because you just don't know when it hits the rocks.
And then Friday, some more banks.
Yeah, BlackRock's about the only one I would really be interested in there. Ally's kind of a steady performer at least.
Yeah.
I have no idea what those three red things are near the bottom.
Don't know either.
State Street.
But they're gonna have earnings. We'll figure out
whoever that is. The three stop signs.
Okay. We'll see.
State Street's not bad either, actually. So State Street's they're like a big money manager. So kind of along the same lines of Progressive, where they're going to make money regardless. Really, people are going to keep having 401ks and IRAs and all that stuff. So
okay, take a look at that one. After looking at these companies, which one would you say, like, if I'm holding a gun to your head, Danny, short one of these and go long on one of these? What would you, or if you just want me to shoot you, that's also fine.
I'm okay with it. Of the bunch, Wells Fargo, I think, would be the one to own prior to earnings.
To go long on?
Yeah, I think it has the most upside of all of them, all those on there. And then on the downside, I guess Domino's Pizza, but it's just so strong that it's
I don't know. A lot of people are probably ordering Domino's Pizza right now. They're probably not going to get too ravished.
Yeah, it's 40 times earnings, though. I feel like it's just not
a lot of pizza.
Not gonna do great. I don't know. That's a lot of pizza, right? So
okay.
I don't know.
So DPZ would be the one that you're shorting.
Yeah, if I had to, but I wouldn't, honestly, just because it's been too strong.
Okay.
Simple as that. Yeah. It hit a new all-time high on Friday, so that's not something you want to just jump in front of. It's kind of like trying to jump in front of a freight train. If it stops, you look really cool, but odds aren't in your favor.
Exactly.
At that point, it'd be like shorting NVIDIA. Like, this is crazy.
All right, guys, we'll have a nice trading week this upcoming week, and make sure to join our Discord. We have a lot of fun in there. Danny gives a lot of great advice.
I told you not to sell Tesla $700. I don't know.
I know. Why did I ever do that? That was like a terrible idea.
$1,500.
I know. Tesla's gonna go to 2,000. I want to make a side bet with you that Tesla goes to 2,000.
It might get to 3,000. It's worth like $200. I wouldn't touch it with anybody's money. To not name names. It's crazy. It really is.
I know. All right, guys. If you like what you saw, just give us a little like, a little subscribe, and see you next time.
I shouldn't do that. I shouldn't do that.
Oh, that's the magic of editing, though. That will definitely not get it.